Ordinary people who invested in SpaceX never gave up for 2 months. Last week, they finally gave up. And that's much bigger news than you might think. The story begins in June. SpaceX went public, one of the largest IPOs in history. The stock started trading at $135. 4 days later, it jumped to $225, briefly valuing the company at over $2 trillion. Everyone who remembers that moment interpreted it as a victory for Elon Musk. But then the picture changed. The stock began to fall, and it didn't stop. Today, it's around $108, even below the IPO price. The total loss since the first day of trading has exceeded $500 billion. That's a figure larger than the annual national income of some countries. Now, what normally happens in such a decline is clear. People panic, sell, and exit. But something strange happened here. While large funds and professional investors exited the stock, ordinary small investors, ordinary people buying from their homes using their phones, did the opposite. For months, they bought more with each dip. "We trust Musk," they said. "This is an opportunity." And they truly acted on that. For months, they remained net buyers without interruption. On August 7th, that ended. For the first time since the IPO, small investors turned net sellers. The amount they sold was $4.5 million. This figure may seem small in the context of market size, but its significance is far from small. A wall of trust that had remained unbroken for months cracked for the first time. So why did this happen now? Analysts don't point to a single reason, saying 3 things were at play simultaneously. First, profit-taking. Some early investors decided to hold on to their remaining gains rather than wait for the bottom of the decline. Second, simple fatigue. Saying it will recover soon for months gets exhausting at a certain point. Third, a recalculation of risk-return. People started asking themselves, with all this uncertainty, how long will my money be locked up here? At this point, another story we've told before on this channel comes into play. For months, a group of $25 billion in investors has been betting that SpaceX stock will crash. What's known in financial terms as short selling. Such a large counterbet has been described as one of the biggest bets ever seen against a newly publicly traded company in Wall Street history. The fact that smaller investors are now beginning to sell is a new signal that strengthens the possibility of this bet winning. But there's another side to the coin, and it's not weak at all. In the same week, Deutsche Bank, one of the major investment banks, maintained its buy recommendation for SpaceX, setting a target price of $255, 135% higher than today's price. So institutional analysts still believe in the company's long-term potential, despite short-term volatility. Here we are faced with the classic market paradox. On one side, institutional investors who look at the picture calmly and say, the numbers make sense in the long term. On the other side, ordinary people who see red numbers on their screens every day and say, I can't take it anymore. They're both looking at the same company, both trusting the data they have, but they're arriving at completely different conclusions. There's also a crucial aspect to this that will be decisive in the near future. Some of the company's locked shares will begin to be released in the coming period, up to approximately 900 million shares. This means that a sudden influx of more shares into the market could create new pressure on the price. Ultimately, no one can know for sure who will be right. But one thing is certain today. SpaceX's most loyal supporters, who have remained unshaken for months, are finally hesitating. And in market history, such a breaking point is usually a turning point, not an end. Which direction it will turn, the coming weeks will show. Stay asset.